All right, traders, it is the late afternoon, early evening of the 5th of February 2018. My name is Jameson, and we are going to look here at Litecoin. When I look at cryptocurrencies, just because I have a lot of time constraints, I'm trying to cover a lot of things, I don't have time to look at all the different cryptocurrencies that are out there. So when I look at cryptos, I generally just look at Bitcoin, Ethereum, and Litecoin. I'm going to look at Litecoin because I think it's showing some positive relative strength, and it generally, I think it offers greater upside potential than our markets do, or certainly any of the equity swing trades that I could provide. So why are we looking at them? And I had been posting that we have a bearish head and shoulders forming. That measured move would give us a market capitalization of about 150 billion. That's grossly bearish. Now I try to pride myself in keeping an open mind. And not being completely biased. So obviously the market's dumped today. There's a lot of what do you want to call it, irrational exuberance the last couple weeks, and we're being punished for it. So I also commented earlier that I didn't think I saw that money was leaving the markets into cryptocurrencies, but now that I'm home, I want to just kind of look at things closer. Now, obviously, we'd have to break this bearish descending channel that we have, really to kind of have a strong foundation to say that this pattern has been invalidated. Matter of fact, while we're talking about invalidation points, if this is actually here, let me go here. We'll get to that here. So truthfully, the head and shoulders is actually broken down. This is the same chart that I showed earlier. If prices were to, if the capitalization if money were to rotate back to cryptos, where we actually re-achieve this neckline, and I would probably have to say that we'd need a higher high. So I'm going to go ahead and say that if we broke this 600 billion market cap, that this pattern is invalidated, and I just would wash it, and I wouldn't lose any sleep over it. But now, just because I did state that I didn't think that we're seeing any market money rotating, let's get back here. So if we just look a little bit closer, actually, let's just look at this. Here, money has just been leaving, and we're kind of at lows. And if we look specifically, so about 2 o'clock to now, so we're looking at, this is about 47 minutes of reported time. We're looking at 310 billion to 347 billion. So I can't tell you how much money left the markets, and I can't. It wouldn't be fair if I said that money left the markets in the cryptocurrencies. But I can say that $30 billion of increased capital exposure into the cryptocurrencies is present as of now. I am also saying that we saw Bitcoin has achieved its lower bearish price objectives. The amount of time spent in consolidation gave us a first and a second price objective, and this lower price objective was just around 6,200, just below that. So if we look here at Bitcoin, we can see here's the little low. Bitcoin is at I might be a little off. This is a daily chart, but I'll say 63.81. So honestly, like what? I'm $100 off. Freaking kill me. So the fact that it's achieved this bearish price objective, as far as my methodology goes, or the Wyckoff methodology goes, is that we would have to consolidate further, and that consolidation is that it would have to build cause to actually have an effect. Now it could consolidate and then break down further, or it could consolidate, supply would dry up, and then it could rally and break out higher. Now, the reason why I like Litecoin over Bitcoin or Ethereum, one is that we can see that Bitcoin still has some bearish momentum. So I have the 8-day and a 13-day exponential moving averages on here. It actually has lost a 200-day simple moving average. It's trading into the bullish channel, so that is providing traders a lower risk entry as it approaches this demand line. But we've lost this upper trend line. So I would speculate that maybe we build here. We might actually recapture this 200-day simple moving average. But at the present time, the 13-day exponential moving average is falling, and the current histogram here for MACD is lower than the previous session. So as of now, Bitcoin longs, they don't have momentum on their side, and they don't have the trend on their side. So they are trading against the trend and momentum. That's generally frowned upon. Now, if we look at Ethereum, Ethereum just honestly kind of scares me a little bit. I like the product. I don't like the developer. Whatever, I won't get into it. But I still think that we have some risk because everything else is traded to its 200-day simple moving average, yet Ethereum has not. And I don't want to forecast and say, hey, there's a head and shoulders that's here. it's hard to ignore that there's a head and shoulders forming. But more importantly, my bias is that everything else is kind of touching this 200-day, yet Ether has not. So I still see some potential downside there. Now, Litecoin, last time I looked, is actually starting to show some relative strength. So Bitcoin's lost its 200-day. Litecoin is actually holding it. Additionally, we can actually see a change in momentum here. The histogram is actually narrowing, which means that bears are losing momentum. And there's a potential positive breakout there. All right, so I had to get, let's get back here. So bears are losing momentum. The histogram's narrowing. But also down here in volume, volume continues to expand, yet prices are not getting any bearish follow through. In other words, we actually are seeing expanding volume, and potentially the day doesn't close, we're seeing higher lows, or lows are kind of holding. Actually, if we look, well, no, okay. I was going to speak about this blue line, look like a channel, but that's just a Fibonacci retracement. I apologize. So we can see that it's holding the rising 200-day simple moving average, but this effort continues to expand. Prices are not going lower. That suggests that there's potentially some bullish absorption that's present. And given the size of this bullish descending wedge, I just think that there's a lot more upside that's available. So a measured move for this wedge is pretty much a retest of highs, where I would define risk as the 200-day simple moving average, or even the demand line that's present of this bullish ascending channel. So I previously posted a video. I actually bought the dip. I sold some more. Given that what we have here, I've actually entered a little bit more of my position. And if it drops down to the lower demand line, I don't care. I'll just buy some there. It's a little bit lower risk entry. But from what I see, I'm interested in having some exposure so that if it does break out, that I can participate in that, and I'm okay with that. But we can still see that the 13-day is falling, so we're trading against the trend, but momentum is slowing. So truly, if you have the patience and the time to continue to follow this, you would actually want to see prices break out. We need to recapture this lost level of support, right? So we want to see a breakout. We want to see a trend change defined by the 8-day exponential moving average crossing over the 13-day exponential moving average. And then we want to see a shift in positive momentum. We want that histogram to pop up to the upside. Additionally, we want to see prices break this lost level of support, confirm this level of support, which is currently resistance, confirm that as support again. And then on that back test, we want to see that there's no volume here. There's still a lot of volume associated here. I want to see a little bit less supply. I want to see a breakout on expanding demand. I want to see a back test this level on less supply. And then I would get a little bullish because I think that we'd actually start to run up and trade into this measured move that we have here, which I would speculate may be a retest of highs. Now understand, a lot of people entered and bought highs, and I'm pretty sure they're a little worried about their current exposure. So we're going to see a lot of profit taking, a lot of volatility on any kind of bounce that's there. Now, just kind of disclosure again, prices can certainly go to nothing. Charlie Lee recently posted it can go to $20. It obviously could probably go lower than that, but given what I see, I think that it is kind of on a springboard, or it's at a pivotal point in time with some of the fundamental stuff that's coming out, that we're seeing some traders anticipate that stuff being released, and we're seeing something that may actually support that. We can quantify that, or kind of objectively or subjectively interpret what we see. I think we're seeing bullish absorption, and that may actually result in a rally out of this bullish descending channel, I guess, in closure. And again, as a reminder, the reason I like Litecoin is because it's actually showing some relative strength over Bitcoin. And I think Ethereum still has some downside in the 200-day simple moving average. So it's a little bit longer than I intended, but I hope it helps some of you. Good luck. Have a great weekend, and go get them.